important because accounting is a language, organization's language, business language. Therefore, every organizations, including the school, the sole proprietor, business, company, government organizations must use accounting for the users. Okay? Therefore, the learning the accounting information is very, very important in the modern world. There are eight topics in this chapter. Topic 1. We will examine how the information can risk when we make a decision. Number 2, we will discuss the management information requirements. Number 3, we will outline the 5 functions of the information systems. Number 4, we will explain why the accurate account information and the audited financial statements are important for the survival of our business. Number 5, we will discuss, examine, and interpret the balance sheet. Number 6, we will examine the income statement. We will describe the business activities that affect a firm's cash flow. Financial statements consist of the 4 statements: balance sheet statement, income statement, cash flow statement, and owner's equity statements. Number 8, we will summarize how managers evaluate the financial health of the business. Introductions. Topic 1. We will, learning object 1, we will examine how the information can reduce the risk when making a decision. Everybody, every individual persons, and every organizations must manage the risk because we live surrounding the risk. Okay? Therefore, the information can reduce this risk. The information is one of the 4 major business resources that managers must have to operate a business. 4 major business resources includes the material resources, human resources, and financial resources, and information resources. We use these 4 business resources and can create the products and produce the product and the services by using these 4 major business resources. The information help managers reduce the risk when making decisions. Information and risk. To improve the decision-making process, the information used by individual persons, used by the business firms, the information must be relevant, must be useful, must be faithful, representative to meet the specific business needs. Okay? There are three elements for the informations. Information must be relevant information, useful information, faithfully representative information. That is the core concept of informations. Using this relevant information resulted in finally better decisions. Relevant information leads to better intelligence and better knowledge, and this better intelligence and better knowledge can lead to the better decisions. Okay? For the businesses, better intelligence and knowledge that lead to better decisions are especially important because this useful and relevant information can provide the competitive edge of our competitors, against our rival companies, and improve our business profit. We cannot live without information. This figure 15-1 shows the relationship between the information and risk. As illustrated in figure 15-1, when the amount of available information is high, there is less risk, and managers tend to make better decisions. When information is more, then the managers can make better decisions based on the risk. On the other hand, when the amount of information is lower, there is a high risk, more risk of making poor decisions. The information rules. The information rule emerged when research confirms the same result each time. Research confirms the same result each time. That research studies the same set of circumstances. The research studies the similar set of circumstances. However, same result continuously. In that cases, the information rule can be emerged. Business people try to accumulate information rules in order to decrease the time, in order to prevent the wasting of time. They spend analyzing the alternatives, choices. The information rules are the great simplifiers for all decision makers. The business research is continuously looking for new rules. Continuously looking for the new rules, and new rules will be set up continuously. These new rules can put to good uses and looking to credit the old ones. All the information rules are discarded, garbage, and no longer valid. Instead, new information rules will be created. What is the difference between the data and the information? Many people use the terms data, terminology data, and terminology information interchangeably. Normal people confused and think data and the information are same, but these two terminologies are different. Then, what is the data? What is the information? Data is a numerical descriptions. Data is a verbal descriptions that usually result from some sort of measurement. Example of data: your current wage level, your current average GPA, the current retail prices of their computers, your current rental payment is only data. However, the information is the manipulated data that is presented in a form that is useful for the specific purposes. Example of information is a graph of average wages that is paid to the male workers and the female workers. Average wages of high school diploma employees or master's degree, MBA degree employees. Okay, is an example of information. Knowledge management. Management of knowledge is very, very important in the current organizations. The average company maintain a great deal of data, a huge ton of data that can be transformed into information. Therefore, every company needs databases. Every company needs the knowledge management. Database is a single collection of data and single collection of information that is stored in one place that can be used by the employees and by the workers throughout the organizations in order to make better decisions. In the case of database is used. Now, what is the knowledge management? Knowledge management is business firms, procedures for generating the data, generating the information, and procedure for using the data and information, and procedure for sharing the important data and informations. That is the definition of the knowledge management. Make the smart and detailed and better decisions. For making the smart decisions, the three different software applications can actually help to improve with the decision-making process, to speed the decision-making process for the workers at different level with the business firms. First, software application is a decision support system applications. A decision support system is a type of software program that provide the relevant data and relevant information to help business firms, employees, workers make the better decisions. These decision support systems can also be used to determine the effect of changing different variables and to answer the what if type questions and blank type questions and true and false type questions and multiple type questions. Export system applications. Export system application is a type of computer program that uses artificial intelligence to imitate human ability to think. That is an expert system. Just like a lava system. Human brain system. An expert system uses a set of rules that analyze information supplied by the users about a particular activity or about a particular program. Expert system respond that particular activity, respond that particular problems. Based on the information supplied, the expert system provides the recommendations to the CEO, to the owner, and provide recommendation to the management. And expert system recommend or suggest the specific actions in order to help make the better decisions. That is the lot of expert information, expert system applications. Third type of application is a business application software. Different type. Business application software has a lot of different type of applications. A number of business software applications can improve the boss, employees' decisions making, employees making decisions, and improve the firm's productivity. Productivity is defined as output for one workers per 1 hour is the definition of productivity. The earlier software typically perform the only single functions. However, today the integrated software combines many functions in a single package. The integrated packages allow for easy linking of text, easy linking of numerical data, allow for easy linking of graphs and photographs and even audio clips. These integration software offers at least two other benefits. Once the data has been entered into the application program in an integrated package, the data can be used in another integrated package without having to re-enter the data. In addition, once a user learns one application, it is much easier to learn another applications in an integrated package. Integrated package. This table 15-1 shows the current business application software that is used to improve the productivity. By using the word processing applications, the users can prepare and edit the written documents and store these written documents in a computer or store the written document on memory devices. By using desktop publishing applications, the users can combine the text and graphs in professional reports, newsletters, and pamphlets. By using accounting application, there are a lot of accounting the applications in order to submit your tax return. Some people use TurboTax software. Some people use the okay, a lot of the company produced, sell the different type of accounting software. Okay? And by using the database management, the users can electronically store the large amount of data and transform the data into informations. By using the graph applications, users can display, print pictures, drawings, chart and diagrams, spreadsheet. By using this spreadsheet software, users can organize numerical data into the grid of rows and columns. Column means the vertical. Row means the parallel. What is the information? Management information system. Management information system is a system that provides managers and employees with the information the workers need to perform their jobs as effectively as possible. The purpose of the management information system is to distribute timely and useful information from both internal sources and external sources to managers and employees who need it. Okay. The projector is not good to see this PowerPoint screen. Therefore, please refer to the page 160. The concise the textbook. Okay, please see the page 160. Okay, because the screen is very display is very poor. Okay. This figure shows the management information system. Summarize the management information system. Today, many business firms are organized into 5 areas of management. Managers in each of these 5 areas need specific information to make the decisions. What is the 5 areas of management? Five areas of management are financial management, operation management, marketing management, human resource management, and administration management. a firm's information requirements. Today, many firms are organized into following five areas of management: finance, operation, marketing, human resources, administrations, areas. The management in each of these five business areas require the specific information in order to make the better decisions. Financial managers must ensure in the area of financial management, financial manager's job is to ensure that the firm's managers and the firm's employees, the renters, the bankers, and the inventory suppliers, vendors, stockholders, the future potential investors, and the government agencies have the information they need to measure the financial health of our company. The financial managers ensure that the operation managers are concerned with present and future sales levels, concerns with current inventory levels of work, inventory levels of work in process, finished good, and raw material inventories. Operation manager must know these level of three types of inventories: raw material inventory, work in process inventory, finished good inventories. And operation manager must know the availability and cost of the material resources that is required to produce the goods and the services. Marketing manager need to have detailed information about the business firm's products and marketing manager need to have detailed information about the rival companies' products, competitors' products, including pricing strategy, new promotional campaigns, and products that competitors are test marketing. Human resources managers must be aware of anything that pertains to a firm's employees, such as the current wage levels and current benefit packages. The administrative managers are responsible for the overall management of the organizations. This figure shows the 5 management information system of functions. 5 functions of management information system in order to provide useful, relevant information to the users. the management information system must perform the following 5 specific functions. The 5 specific functions of management information systems are collecting the data, storing the data, updating the data, processing the data into useful information, and presenting this information to the users. These are 5 specific functions of management information systems. This figure shows the typical visual displays that is used in business presentations. A visual display is a diagram that represents several items of information in a manner that make a comparison easier. Visual display help business people present information in a form that can be understood easily. There are a lot of type of visual displays. Which type of visual display is better for our business, for our organizations? Different. Several visual display types are graph, visual display type, bar chart, visual display, pie chart, visual display, and 4-column table, visual display. Which type of visual display is better for our company? Each type of visual display has the advantages and disadvantages. Therefore, it's the manager's job to choose which is the better for our company. Okay, this table shows the typical 4-column table that is used in business presentation. First column represents the section of the U.S. section of the U.S. territory: Eastern Territory, Midwestern Territory, Western Territory, total. Second column represents the number of salespersons. Third column represents the consumer products. Fourth column represents industrial products. Generally, these tabular display have less impact than the visual type of displays. However, displaying this information that could be contained in a multi-column table, such as the one shown in this table, requires several bar or pie chart. Okay, next topic. Learning objective. This chapter consists of two big categories. First category is information technology for the business. Second category is accounting. Second category of this chapter. Start with why accounting information is important. What is the definition of the accounting? Accounting is referred as a language, business language. Accounting is the process of systematically correcting the financial information, systematically analyze the financial information, and systematically reporting the financial information. Not only can account information be used to answer the question about what's happened in the past, but also accounting can be used to help make a decision about the future. Okay? Accounting shows the past information, present information, and future information. Okay? In order to improve the accuracy of business firms' accounting informations and business firms' financial statement, the business rely on the audit. The audit of financial statement. The audit of financial statement is conducted by the independent accountant that is employed by public accounting firms. The outside independent American Institute of Certified Public Accountant must perform the audit of the financial statement minimum one time for 1 year. That is the law. Auditing. Audit is the examination of company's financial statement and the examination of accounting practices that produce the company's financial statement. The purpose of an audit is to make sure that a business firm's financial statement has been prepared in accordance with the U.S. generally accepted accounting principles. What is the generally accepted accounting principles? Generally accepted accounting principle is an accepted set of the guideline and set of the accounting practices for U.S. companies. That is reporting the financial information and for the accounting professions. Accounting profession, accounting employees, the average wage level of the accountant is very, very high. if you work over the 2 years as an accountant in the company, your salary is more than $50,000 for 1 year, except the overtime payment, except 401k plan, except the medical benefit, vacation, P, okay? If an accountant determines business firm's financial statement present the financial information fairly and conform to generally accepted accounting principles, then the auditor, the independent professional CPA will issue the following statement. In our opinion, in my professional CPA opinions, the client's company's financial statement represent fairly in all materials, respect the financial positions of the company, and my client company's financial statement is prepared in conformity with the U.S. generally accepted accounting principles. Okay, accounting fraud, fraudulent financial statement, and ethical behavior of management, or unethical behavior of the management, and the reform of this accounting fraud reform, the federal government's reform, or the unethical behavior of the management. The accounting problems and many U.S. companies have forced many U.S. investors, many U.S. lenders, bankers, suppliers, vendors, and government regulators to question the motives behind the fraudulent behavior and behind unethical accounting practices. Government the question the motives of this fraudulent financial statement. Example, the boards and non-oil companies and Lehman Brothers financial institutions use all kinds of illegal accounting methods and use all kinds of unethical accounting practices. How? To inflate the profit, to increase the revenue, to decrease the fraudulent expenses. Therefore, a lot of investors lost their money because investors bought the common stock of these Enron companies, the stock and Lehman Brothers stock based on the Enron company's financial statement, based on Lehman Brothers financial statement. But that Enron's financial statements are fraudulent. Therefore, many U.S. investors lost their money. Unfortunately, the one hurt, the users, investors hurt when companies report inaccurate accounting information or report misleading accounting informations. These hurting persons are not the high-paid corporation executives, but the hurting persons is the employees who lost their job and the money they invested in companies' retirement plan, such as 401k plan. If the company filed, the fraudulent company filed for bankruptcies, actually, Enron company, Lehman Brothers filed the bankruptcy. And investors, lenders, bankers, and surprise vendors who experience a lot of money losses due to their investment in that company based on the fraudulent accounting informations. In order to help and ensure that corporate financial information is accurate and to prevent accounting scandals, the U.S. Congress enacted Sarbanes-Oxley Act. Sarbanes is a Republican congressman. Oxley is a Democratic congressman. Two congressmen combined and submitted same act. Key components of these Sarbanes-Oxley Acts are as follows. The U.S. Securities and Exchange Commission is required to establish a full-time 5-member public company accounting oversight board. What is the meaning of oversight? Monitor, control, 5-member, monitor all of the U.S. public companies. The executive and financial officers are required to certify periodic financial reports and are liable for intentional violation of security reporting requirements. The accounting firms are prohibited from providing many types of non-audit and consulting services to the companies they audit. Auditors must maintain the financial documents and audit work papers for minimum 7 years. The auditors, the accountants, the employees can be imprisoned into the jail for up to 10 years. Fraudulent management, fraudulent auditor must live in the jail for 10 years and subject to fines. Minimum $1 million for destroying financial documents and for willful violation of these security laws, Sarbanes-Oxley laws. A public corporation must change its reading, auditing firms is every 5 years, rotated. And the auditing firms every 5 years. There is added protection for inner whistleblowers who report the violation of Sarbanes-Oxley Act. My boss violated Sarbanes-Oxley Oxley Act. Please prosecute my boss, and please imprison my boss in the jail and live in the jail for up to 10 years. Whistleblower jobs, inner employees jobs. While most people welcome Sarbanes-Oxley Act, the complex rules of Sarbanes-Oxley Act make compliance more expensive, spend more money, and spend more time for corporate management and more difficult for accounting firms. Okay, a different type of accounting. Accounting is usually broken down into two big, broad categories: financial accounting and managerial accounting. Financial accounting generate financial statement and reports for interested people, interested investors outside the organizations. Managerial accounting provides managers and employees with the information that is needed to make decisions about the firm's financing, decision about the firm's investing, decision about the firm's marketing, and decision about the firm's operating activities. Two categories: financial accounting, managerial accounting. Okay. Additional specific areas of accounting include the following: cost accounting, tax accounting, government accounting, not-for-profit accounting. Cost accounting determines the cost of producing the specific products. Tax accounting is for planning the tax strategies and for preparing the tax return for individual persons and business firms. Government accounting provides the basic accounting services to ensure that tax revenue are collected and tax revenue are used to meet the goals of the state government, the goals of local government, the goals of federal government. Not-for-profit accounting help not-for-profit organizations such as the church, schools, public hospitals, okay, to account for all donations or contributions, account for all offerings and expenditures. Not-for-profit accounting addressed these issues. Careers in accounting. The accountant generally are classified as either private accountant and public accountant. Private accountants are employed by specific individual business organizations. However, public accountants work on a fee basis for clients and may be self-employed or be the employee of accounting firms. Typically, public accounting firms include on their staffs at least one CPA. Who is the CPA? CPA is an individual person who has met the state requirements and experience and has passed the rigorous accounting for part of examinations. Okay. Accounting. Accounting is the basis of accounting process. Left side of balance sheet, left side of balance sheet is asset. Right side consists of liability and owner's equity. Asset equal liability plus owner's equity is the basis for accounting process. What is the asset? Asset is all business resources that all the business owners owns and control and have the title to that asset. Liability is the firm's debt and firm's obligations. Owner's equity is the difference between asset minus liability equal owner's equity. Owner's equity is my money. Liability is lender's money. Asset combine my money plus lender's money. For every kind of businesses, the total dollar amount for asset must equal. The ending balance of asset must equal the sum of the ending balance of liability owner's equity balances. That is the basic accounting cases. To use the communications, the firm's accountant record raw data, such as invoices. Okay? The firm's day-to-day financial transactions using a double entry bookkeeping system. What is the double entry bookkeeping system? That double entry bookkeeping system is a system in which each financial statement is recorded as two separate accounting entries to maintain the balance shown in a communication. What does it mean? I go to the computer and I pay the $200 for that computer. In that case, one business transaction must record in the debit side and in the credit side. Two separate accounting entries must be recorded in the debit side and credit side. That is the double entry bookkeeping. Double entry bookkeeping. Okay? One business transaction requires double entry bookkeeping. Double entry means the debit side, credit side. At the end of the accounting period, December 31st, all of the financial transactions are summarized in business firms as a financial statement and include in business firms annual report. Annual report is a report that is distributed to the stockholders and other interested parties. Okay? And this annual report must be submitted to the U.S. Securities and Exchange Commissions one time for 1 year. That is the law. The balance sheet is the most important financial statements. Balance sheet or statement of financial position is a summary dollar amount of a firm's asset, firm's liability dollar amount, and owner's equity dollar amount at the end of the accounting period. The balance sheet must demonstrate that assets are equal to the liability balances plus owner's equity balances. And the balance sheet must demonstrate that the accounting equation is still in balance. The balance of assets equal to the balance of liability and equity. This figure shows the personal balance sheet. Asset minus liability equal net worth. Business balance sheet use the owner's terminology of owner's equity. However, personal balance sheet use the net worth instead of the owner's equity. Okay? Terminology is different between the personal balance sheet and the business balance sheet. Still in balances. Total asset balances equal to the total balance of liability and net worth. Okay, same. Accounting equations still in balance, match, just like a mirror. This figure shows the business balance sheet. Business balance sheet is similar to the personal balance sheet, but different some terminology. Okay, see anyhow. Asset. What is the asset? Asset is my property. That property is controlled by the owner. Okay. On a balance sheet, the assets are listed in order from the most liquid account to the least liquid account. Most liquid asset is a cash. Cash is exchanged simultaneously at the same time. But intangible asset cannot be exchanged instantly, least liquid. Therefore, cash is written at the top of the asset. Intangible asset must be represented, must be written at the bottom of the asset. Okay? What is the meaning of liquidity? Liquidity is the easy with when the asset can be converted into cash. The asset can be converted into cash as quickly as possible. Is a definition of the liquidity. Current asset is asset that can be converted quickly into cash and that will be used within 1 year or less than 1 year. That is the definition of the current asset. Order of current asset from most liquid asset to the least liquid asset are as follows. Cash, most liquid asset, therefore the cash is listed first. Asset starts with the cash because cash is the most liquid asset. Marketable security. Below the cash, marketable security balance amount must be represented. What is the marketable securities? Marketable security is the common stock, include the common stock. The company is the bond and other investment that can be converted into cash in a matter of days. Such as the federal government, the bond, okay? Account receivable. Account receivable. What is the meaning of account receivable? I sold my product to the client, but the client told to me, I do not have a cash right now. Can I give you a service fee later? Okay. I approve. Receiving the fee in later, that is the account receivable. Account receivable is resulted from allowing the customer to make credit purchases that are generally paid within 1 month to 2 months. Okay? Note payable. What is a note? Note is a promissory note. Is a legal documents. Account receivable is not legal document. Account receivable is only oral promises. But note receivable is a legal promises. Therefore, not pay. The note receivable in that case is he or she will be sued. Go to the court. Okay? Note receivable are repaid over a longer period of time than the account receivables. Merchant inventory. Merchant inventory represents the value of goods on hand for sale to customer. Okay? Inventory means the merchant, the goods on hand for sale. Standby for sale. That is the inventory. There are 3 types of inventory. Raw material inventory, work in process inventory, and finished good inventory. Prepaid expenses. Prepaid expenses are the asset that have been paid for in advance, but has not yet been used. What does it mean? For example, you pay the rental payment every first day, but you do not leave, but you have a legal right to leave from the May 1st and to the May 30th. But you pay your rental payment to the homeowner on the May 1st. In that case, you have a legal right to use the home for 1 month, but not has been used. In that case, the prepaid expense is your asset, not expenses. Okay? You pay your tuition payment to the school before starting a semester. In the cases, you have the asset. Tuition expenses is not your expense, your asset, because you have a legal right to receive lecturing services. Okay? That is a prepaid expenses. Fixed asset. Fixed asset will be held or used for a period longer than 1 year. 1 year is within 1 year is a current asset. Longer than 1 year is a fixed asset. Okay. Example of a fixed asset is a land, building, and equipment used in the continuing operation of a business. Depreciation. Depreciation is a process of apportioning the cost of a fixed asset over a period during which it will be used. Intangible asset, what is the meaning of intangible? Intangible is not touchable, not exist physically, but have a value, money value based on the right and privileges they confer on the business premises. Example of intangible asset are patent, copyright, trademarks, and brands, and goodwill. Liabilities and owner's equity. Liability separate into two categories. Current liability, long-term liability. Current liability is a debt that must be repaid within 1 year. Current liabilities includes account payable, note payable, salary payable, and tax payable. All payable accounts are categorized as a current liability. Account payable is a short-term obligations that arise as a result of making credit purchase. Note payable is obligations that has been secured with a promissory note. Salary payable expenses that have been incurred during the current period but will not be paid in the next account period. Tax payable must pay within 2 months. Long-term liability the debt that needed not to repay for at least 1 year. Okay. Owner's equity or stockholders' equity. For the sole proprietorship or partnership, the owner's equity is shown. The owner's equity equal a difference between asset and liability. Asset minus liability equal owner's equity. For a corporation, owner's equity usually is referred to as a stockholders' equity. Dollar amount reported on the balance sheet is the total value of common stock plus retained earnings that have been accumulated to the current date. What is the retained earning? Retained earning is a portion of the business profit. But that business profit does not distributed to the common stockholders. That is referred as a retained earning. Okay? The business law provides that some profit cannot be distributed to the investors. That non-distributed profit is referred as a retained earnings. Income statement. Income statement is a summary of firm's revenue. Revenue minus expenses equal income statement during the accounting period. Another name of income statement is earnings statement or statement of income and expenses. The difference between income minus expenses referred as a profit or losses for a business, or cash surpluses, or cash deficit shortage for the individual. Okay? For a business, revenue minus cost of goods sold minus operating expenses equal net income. This figure shows the first income statement. Business income, the difference of between the personal income statement and the business income statements will be similar, but different in some aspect. Okay, income minus monthly expenses equal cash surplus or profit. However, this figure shows the business income statement. Revenue minus cost of goods sold equal gross profit minus operating expenses equal net income before taxes minus federal income taxes equal net income after taxes. A business income statement is more complicated than the individual income statement. Revenue. Revenue is the dollar amount earned by the business firm from selling the goods, providing the services, or performing the business activities. Gross sales minus sales deductions equal net sales. Gross sales minus total dollar amount of all goods sold during the accounting period. Deductions. There are several types of deductions. Sales return deductions, sales allowance deduction, sales discount. Sales allowance means that I sold the product to the client, to the customer, but the product is defective. In that cases, I told to the customer, I will decrease your selling, decrease the buying prices. That is the selling allowance. What is the minimum sales discount? If you pay me the credit card, the amount within 10 days, then I will discount the credit sales amount 2%, 10%. That's a sales discount. Sales return means that the customer return all the importing products based on the defective or not conforming the invoices. Okay, net sales is the actual dollar amount received by a firm for goods or service it has sold. Net sales equal actual sales minus adjustment for return, minus adjustment for sales allowance, minus adjustment for sales discount equal net sales. Cost of goods sold. Cost of goods sold is the dollar amount equal to the beginning inventory price. The cost of goods sold equal beginning inventory price is net purchase during the accounting period minus ending inventory equal cost of goods sold. If you have time, beginning inventory purchase this is inventory ledgers and the cost of goods sold, and ending inventory base account equation. must be balances. Okay. Therefore, beginning inventory minus purchase amount plus purchase during the account period minus ending inventory equal cost of goods sold. Gross profit is a firm's net sale minus cost of goods sold. Cost of goods sold. Net sales means the retail selling prices minus the cost of goods sold from the vendors, suppliers, equal net sales. Operating expenses. Operating expenses are all business costs other than the cost of goods sold. All business expenses minus cost of goods sold equal operating expenses. There are two big categories of operating expenses: selling expenses and general expenses. Selling expenses includes the marketing the expenses for marketing activities. Generally, the expenses is the wage, salary, the electronic payment, ticket payment, gas payment, equipment payment, copy machine payment, rental payment. These are general expenses. Okay? Cost that is incurred in managing the business. Net income. Net income equal revenue minus expenses is a net income. Net losses equal expenses minus revenue. Net loss is incurred when expenses is exceed the revenue. Expenses is more than the revenue. In that case, net loss is incurred. Formula of net income. Net income from operation equal gross profit minus total operating expenses. Net income from operating expenses from operation minus interest expenses equal net income before taxes. Net income before taxes minus federal income taxes equal net income after taxes. Net income before taxes and net income after taxes. Statement of cash flow. Statement of cash flow is a statement that illustrated how the company's operating activities, investing activities, and financing activities affect the cash during the account period. Information on the cash flow statement can be used to evaluate decisions related to the firm's future investment and financial needs. Even if the business incurred a lot of profit, if cash flow, the business do not have enough cash, in that case, the business firms will must file the bankruptcies, even if the business firm have a lot of profit. Cash is most important. Cash is just like blood in our human body. Okay? Without blood, we cannot survive. Without the cash, business cannot survive. Investors, vendors, suppliers are also interested in the firm's cash flow statement. Investors want to know whether the firms can pay my dividend or not. Vendors and suppliers use the information on the cash flow statement in order to evaluate whether the borrowing firms have ability to repay my debt or not. This figure shows the statement of cash flow. Cash flow from operating activities, cash flow from investing activities, cash flow from financing activities. Okay, there are three types of activities: operating activities, investing activities, financing activities. Among these three types of activities, operating activity is the most important business activities. Okay, three section. Cash flow, operating activities, cash flow from investing activities, cash flow from financial. Totals of all three activities are added to beginning cash flow plus total. These three cash flow activities equal ending cash balance. Okay. This figure shows the comparison of present and past finance statement for Microsoft corporations. See this slide at home. Okay, financial ratios are last topics. A financial ratio is a number that shows the relationship between two elements of the firm's financial statement. Two elements are the business balance sheet account elements and income statement account elements, measuring the firm's ability to earn the profit are returning on sales. Or profit margin is a financial ratio calculated by dividing the net income by net sales. Return on sale indicated how effectively the business is transformed sales into the profit. The higher return is better than the lower return. Higher return is more better. A lower return on sale can be increased by reducing the expenses or increasing the sales revenue. Measuring the firm's ability to pay the debt. To measure this ability to pay the debt, use the current ratio. Current ratio is a financial ratio calculated by dividing the current asset. Current asset is a numerator. Divided by current liability is a denominator. Okay. Example of Northeast East Arctic supply is current ratio is 2.6. What does it mean? It means that Northwest Arctic Supply Company has 2.60 cents of current asset for every $1 current liability amount. A higher current ratio indicated that a firm can pay its current liabilities. Okay, last slide. Measuring how well a business firm manages is inventory. Inventory turnover ratio, financial ratio is used to measure how well a firm manages its inventory as effectively as possible. Inventory turnover ratio is a financial ratio calculated by dividing the cost of goods sold is a numerator divided by average value of inventory is a denominator. Okay? Average value of inventory is calculated by using this formula. Beginning inventory plus ending inventory divided by 2 equal average value of inventory. Example 4, Northeast supply, the inventory turnover is 8.2 times per year. What does it mean? It means that Northeast Supply company sells the merchandise inventory 8.2 times every 1 year. For 1 year. And about once every 45 days. What does it mean? If this company purchase inventory, in that cases, maintain the stored inventory for 45 days in the warehouses for selling this inventory. After 45 days or previous, the purchase inventory will be sold out. Okay? Therefore, we must purchase the inventory for 8.2 times for every year. Okay? Average inventory turnover for all business terms is about 9 times per year, but turnover rate is changeably wide from industry to industry. The quickest way to improve inventory turnover is to order the merchandise in smaller quantities and more frequent intervals. Okay? Order the smaller inventories. In that cases, the smaller inventories will be sold very quickly. In that cases, inventory turnover ratio will be increased. Okay? Increased high inventory turnover is more better for the company, because if the inventory turnover is increased, the company can save the inventory turnover fees, decrease the warehouse storing fee. Okay? Therefore, the higher inventory turnover, the more better the business.